We've got earnings. We've got Kevin Green, Caroline Woods joining me this afternoon. And these are actually interesting earnings, so I think we might want to just get straight to it since the market was a little quiet there in the last hour. I think we hit most of the technical stuff with KG earlier. Micron beats. Here we go, not bad, $5. Jenny's been all over the Micron story this year, pointing out that the calendar in 2025 basically started at the low end of Micron's range. It's been in a range all the way since August last year, effectively, and hit the low right when we started the year. So it's actually been a good year for Micron, and it's going to keep going, it looks like. $1.56 on the bottom line for the second quarter is ahead of the 142 estimate, in sales over 8 billion, 8.05. We're also ahead of the estimate, which is for 7.89 billion. So that's a pretty nice little beat from Micron. I think that's very welcome right now, Caroline.
Yeah, the expectation was for 36% year-over-year revenue growth with that $7.9 billion estimate and 8.05 billion clearing that bar. As you said, beat on the bottom line. I was taking a look at the outlook for the current quarter, calling for revenue of $8.8 billion plus or minus $200 million. So Zacks had an estimate of around 8.47 billion. So that also coming in better than expected, even if you subtract that 200 million. And then in terms of earnings per share, $1.57 plus or minus 10 cents per share. The estimate was for $1.48, so mostly higher than that as well. I guess $1.47 would be the low end of that range. So, this was one that Alex and Jenny were talking about on Next Gen 2, known for kind of wild swings amidst earnings, and it looks like it's a clear winner, at least based on what we've seen so far. And as we talked about this morning, Micron has actually outperformed the broader market, the overall semiconductor index, the overall tech space, and competitors, or other chip makers, I should say, like NVIDIA. And it looks like it's going to add to those, the 20+% year-to-date gains it's already seen.
Yeah, year-to-date winner, recent winner, and now a beat. KG, could this be fodder for a bullish narrative tomorrow?
It could be. Let's hear what the conference call has to say, right? I mean, they have a very diverse business, and obviously we've been focusing on the AI side of their business, and that's been doing a really decent job, especially when you're looking at high bandwidth memory. But they also have exposure to DRAM and NAND chipsets as well. And so I'll have to look into this a little bit more. But just off the top, looking at the price action, it's doing pretty good. And after hours here, my question is, are you going to break out above 110? I mean, if you kind of go back over the last year, it's been topping out at around 110, and it's been bottoming out at around $85 here. So it's been trading in a pretty wide range here for the last year or so. We haven't seen a confirmed breakout or breakdown for this stock right now.
Okay. Yeah, this is a nice surprise, I think, because it's important to keep in mind that long-term range Micron was in did not participate in the second half of last year. Its AI-driven rally was cut very short in the spring. We started to get that narrative about slowdown in some of the older chips and kind of the more general cyclical demand. So if they perk up here and then surprise on the outlook, I mean, this is pretty good, I think, Caroline, and counts as a surprise.
Yeah, it seems to be the case. I do see commentary here. Data center revenue tripled from a year ago. So that's certainly a positive there. Obviously, we'll have to see what they have to say about pricing, too, because I know some analysts were getting more bullish based on potential for increase or prices that were already increasing. So obviously, the more consumer-oriented business has been the weaker business, PCs, smartphones, auto. But the company did say that they expect that to start improving in the second half of the year. They said that when they last reported and when they actually cut guidance for this quarter that they're reporting on. So, we're expecting for a kind of a back half recovery. So let's see what they have to say about that. I think tariffs also going to be important. The China risk and the tariffs in terms of the earnings call, what to look for. Let's see what they have to say about that. But right now, it looks like a pretty positive response to these numbers.
That would really be the kicker if they said, we beat all our expectations, but we're worried about tariffs. Because, this is clean. This is a clean report. Because their expenses also rose significantly, 8% a year ago with this investment that's going on. but it still was a little bit shy of what folks thought they were going to have to spend to achieve these results. So analysts were expecting more than 900 million, and they were less than that in their R&D. And I think that shows up in their margin, KG. It may be a little bit lower than estimated, but the gross margin at just shy of 38%, that was 20% a year ago.
Yeah, their gross, they were marking down a lot of inventory too.
Right.
They're pretty much down with that. So that's
basically
so
what hit the stock second half last year.
Yeah, where they were having these really odd comps of like 3%, gross margins and things of that nature. So it seems like they've kind of worked through that inventory. You're starting to see a little bit more of a normalization there. The commentary around the need for pretty much the DRAM chips and things of that nature, technology for the data centers, and that's kind of a new niche for them to try to expand in, is actually a very big tailwind. And so you are seeing it in the shares for right now. And then let's just listen to what the commentary is going to be around tariff policy. I mean, every single semiconductor company right now is going to have tariff risk one way, shape, or form. And so they might be able to kind of normalize and say, hey, everybody else is going to have problems. We might see some headwinds here as well, but we've been able to kind of go through our bear cycle, middle of last year, late last year, and now we're starting to, see some profitability, some really good profitability.
Okay. Yeah, good report, good progress. There is that crucial point, of course, which is that the bar here is a bit lower, obviously. And that's a very important point to stress there. So I can definitely appreciate that. But in terms of being able to offer something positive, if Micron trades above 110, then you've got like a pretty clear, big move on this stock. So we were talking earlier about some of the analyst expectations for this, and I think the price target average was like 120. Was that right, Caroline? 120? 125.
250.
Someone's hype target was 250, which was like, get out of here. But 125 seems very achievable right now if you break this range.
Well, I mean, let's see, though. I mean, almost 90% of analysts were in the buy camp heading into this report. So the majority all very much bullish. But let's see if those price targets get notched higher based on the fact that it's a clear beat.
Okay. KG, you care about FedEx, or should we keep talking Micron here? I mean, FedEx is interesting from a FedEx perspective, right?
Yeah, I mean, you're getting some insights into the logistics of the U.S. economy. Now, FedEx and UPS, but FedEx probably a little bit more, has had some headwinds when it comes to their business. Not only labor disputes, but also volume being reduced or decelerating, margins being squeezed here. You have a lot of competition when it comes to Amazon and some of these other players in this space. And they did lose that USPS contract, and they actually did cut their full year revenue guidance because of that. They're not able to really backfill. And that was a huge portion of their business that they are missing right now. Once again, they didn't really kind of battle for it because it was fairly expensive to keep that business up. But once again, you're not really seeing a backfill. So you are seeing the shares down for right now. Their outlook for fiscal year revenue, they are looking at flat to slightly down on a year over year basis. They are seeing progress when it comes to the FedEx freight spinoff preparation. So that's another thing that they're trying to work through. And they did see around a $46 million tax benefit for this quarter as well. So this is a company that has not been able to see a little bit of a turnaround. And unfortunately, on the weekly chart, this was kind of a really key level for it to hold before you see a major breakdown in price.
Okay. What do you think, Caroline? Clear insight into the economy or clear insight into steep competition for shipping goods?
I think both, but I think that the fact that they had already cut their outlook when they last reported and said they previously were expecting low single-digit percentage increases for revenue. They brought that down to essentially flat, and now they're bringing it down again to slightly down. I think is going to be reason for punishment. But if you take a look at the trailing numbers, they were also mixed. EPS, in terms of adjusted EPS of $4.51, missed the $4.65 estimate that Wall Street was looking for. Top line, though, did beat. They were expecting less than 1% revenue growth at $21.89 billion, came in at $22.2 billion, so greater than that. I think that's notable, seeing as revenues have declined something like 8 of the last 9 previous quarters. But I think that it's all about outlook. We know that, and it doesn't seem like this outlook's good, or it's certainly not getting any better.
Okay. FedEx still mired, it seems, and market not cutting it much slack. Thanks, guys. Very helpful. FedEx under pressure. Micron, though, I think the more important one here, higher, and giving us some good tech news in the afternoon.